So welcome to the unpredictable world of crypto, preparing for Black Swan events. We've got myself, Ash, we've got Gaz, and we've got Ashley as well, Ashley Duke, one of our associates, who has been around for a little bit of time, literally got in the market on the back of a Black Swan event, so it's a pretty good topic to talk about. We're going to talk a lot about FTX, obviously Silvergate, and a few other potential Black Swans and how to essentially prepare for them with risk management and just a bit of common sense, realistically. So, let's get into it. So, guys, do you reckon the FTX capitulation was a Black Swan or not?
Yes and no. Yes, in terms of obviously no one really expecting it, and it had quite a negative effect on the market. But in terms of the percentage we dropped wasn't huge compared to previous Black Swans like COVID. I think COVID was the real Black Swan, the biggest one I've sort of seen since I've been in the markets. Anyway, before that we also had Mt. Gox, but I wasn't in the market, wasn't aware of it. So as I say, yes and no.
What about you, Ash?
I would say yes. I got in May 2020 into crypto, and I got in at the tail end. Unfortunately, you two suffered. I kind of got in, I hate to say it, but during the middle, and then it was starting to bottom. So I can't really personally say whether the whole COVID thing, because I think it was March it started dropping, didn't it, when we went into lockdown. I would say the FTX for me, and also Terra, which
yeah, good point.
And I actually think the whole two are probably linked. I think, without incriminating myself, I think the people that were involved with FTX were most probably involved with the Terra collapse as well. And I think
you're right. I think when we look back and we look at like the obvious of who went bust off the back of Luna, which was 3 Arrow Capital and stuff like that, they were also linked to Alameda Research and obviously FTX. And then we think like there was rumors going on at the time that FTX were part of a bank run on Luna to get rid of a certain thing, stable currency with Binance and stuff, and obviously went wrong because it led to them. And then obviously we saw Celsius go, we saw other companies such as Voyager go. So it's not just like a single point of failure. You could argue that Terra Luna was the start of it, linking to then the FTX, which was then the capitulation, which was essentially a Black Swan. And in terms of a Black Swan, if you're wondering what one is, for everyone listening, it's kind of like an unforeseen event that shakes a market to its core. And FTX was the second largest exchange at the time. It was one of the biggest ones in terms of volume at the time. It had a lot of offers, opportunity as well for marketers to make money, as well as VCs to loan their money, because they were taking a no-look approach to everything. Once it goes, it goes. And this is why we went from like 25,000 pretty quickly down to 15,000 in BTC. Pretty drastic numbers, but the reality is it happened and no one saw it. Well, a few people suspected it, but it was the same with Luna Terra. We talked about it on the last podcast. It was an obvious Ponzi scheme, same as Celsius, but no one expects it to just go to zero overnight, and it literally did. So stuff like that. Yeah, for me, I agree. I think probably a Black Swan in a way, but for my memory, remembering the obvious ones was a Brexit one and also the COVID crash. COVID crash made me sick to my stomach. With FTX, it didn't really affect me because I was already out of the market, so it was kind of nice. Sorry if you got hurt in that, but
that's sort of the point I was actually going to make next. When you look at them, when you compare the two, obviously COVID was a Black Swan for all markets. Like everything dropped. Gold,
minus
stocks,
fucking 10 for oil or whatever it was.
Everything. What? Yeah, oil went to negative. So yeah, that was a true Black Swan in terms of affected the entire world markets. Whereas obviously all the FTX stuff and Luna, etc., only affected crypto. And then just as you said there, depending on what your personal, how you were personally affected by it too. So again, I wasn't really affected by FTX, Terra Luna, etc., because I was majority out of the market. Whereas when COVID hit, completely unprepared, and more to the point where I didn't have the funds ready to go and buy it at the time as well. Whereas it was a bit different with FTX and Luna and stuff. So yeah, again, it all comes down to your personal, how you're personally affected by it too.
I agree with that
I was
massively.
affected.
100%.
You said in the podcast a few weeks ago with Pinky how he was at the
Yeah.
party. I was actually chatting with him on the group, and I was.
I remember it.
And
It was crazy.
And
Like, what?
he went home and got it out, from his ledger, and then I was the one who didn't. I was just hoping that it would recover, because I personally just did not believe anything that big could go down. I was ignorant to the fact, and I lost 5%
you weren't the only one,
of my
though.
account. I just got absolutely walloped. So,
But that's the thing. Like, I mean, yes, you could argue. Well, we all know this now. Anything's possible in crypto, but even back then, no one thought it would have lost its peg to the extent that it did, and it obviously it did, because it was an algorithmic stablecoin. We didn't really understand what an algorithmic stablecoin could do if it failed versus a traditional stablecoin. So yeah, like, yes, we could all put our hands up and go, "Oh, we're very, very ignorant," but the reality is, it was the first of its ever kind. It's like, yeah, we look back and think, "Oh, it was done on backtesting data, should be okay." But then you think future simulations, if enough things try and break it, it will happen, and it did, and it sucks. And the reality is, I think that was the thing that kicked the can down the road, and this is why a lot of liquidations happened. This is why a lot of VC firms got trapped, and then they tried to play themselves out. Look at FTX; they tried to play themselves out of it and make it back in one trade. Oh dear! And guess what happened there? I think it was like a chain of events which ended up as like, oh my god, the bear market of 2022 literally has been majority of it a black swan. In that sense, it's like an unforeseen event which triggered multiple scary, realistically. And we're still, let's be fair, we're still cleaning up now when we look at the next topic that I want to mention, which is Silvergate. The biggest liquidity provider in crypto is caught up in it. You know, we've got reports saying that Voyager's down so much in terms of billions. You've got Celsius, and then you've got FTX down roughly 14 billion, I believe. That's a lot of money. And that's the biggest liquidity provider. I think we're okay now because I think a lot of exchanges have literally went, right, let's move provider. Thank you. Which makes it easier. But if this dropped, and it dropped quickly, and they weren't prepared, it could have been even worse. So we're lucky in that sense. But I don't know about you guys, but what do you think about the whole Silvergate situation? Do you think that's now kind of potentially not as bad as what it could have been?
So first thing I'll say is, just like we were saying a minute ago, even the biggest players in the space can get caught up in thinking that something's safe or over leveraging. I will come on to Sailor a bit later. But yeah, events like this just sort of show, what's that famous saying, when the tide goes out, you see who's swimming without underwear, something like that.
Warren Buffett said that when the tide runs out, we'll see who's got see who's got pants on, really,
something like that.
Yeah.
But yeah, it happens to everyone. You get caught up, you think things are safe or things can't happen. And this is why we sort of slightly going off on a tangent, but we always say to succeed in crypto or any market, you need to stay in when times are tough, like stay in the bear market, stuff like that. Because when you experience events like this, it makes you realize, oh, okay, anything is possible, or, oh, this is why it's important to take profits. When you look at some of the prices, what some of the prices were at all-time highs, just as a one off the top of my head, you got something like Polkadot was what, $50, $55. If someone had said to you at the height of the bull market, oh, that will be trading at $4 again, you'd be like, no chance. How's this ever going to go back down to $4? And it does. And this is why when you're new to the market, you don't take enough profits, because you can never foresee literally round tripping from $3 or $4 up to 55 all the way back down again. So it's very important to stay in the market when times are tough, and to experience these things, and that then prepares you for, future cycles. In terms of Silvergate all being over, I don't know is the honest answer, because we keep finding things, things keep being dug out. The whole FTX saga just keeps continuing. I wouldn't be surprised if there's more bad news to come. But this is how markets bottom. They bottom on bad news. So hopefully, I mean, I thought we'd seen the end of it all by the end of last year. I thought, right, that was just a full year of, as you say, like an entire year of black swan, just bad news after bad news, contagion, liquidations, etc. So I don't know, maybe we've got a bit more to come. we'll just have to wait and see.
What about you, Ash? What do you reckon?
Well, we've yet to have the court case, haven't we, with SBF? And I think that isn't till like November time. And can you imagine if we just go sideways now for the next 6 or 7 months?
I genuinely think
And
that's
then-
going to happen.
Yeah.
Like, we've both said it.
And then all the proverbial hits the fan, and then we drop. So, yeah, I don't think it's. I'm not too sure about the Silvergate. It depends how many people kind of owe pulling money out and owing money to do with them. There's obviously this domino effect, isn't there, that happened with FTX, and it's quite possible that we haven't seen the end of it with Silvergate. I suppose time will
I
tell.
agree.
It's just waiting for all the evidence and the truth to come out, isn't it?
I guarantee.
And that's why it
Yeah.
is, like you say, it's a domino effect, because once that comes out, then that affects that, then that affects that. So, yeah, hard to say whether we're at the end or not.
This is slightly unrelated though, but like I watched CoffeeZilla last night on Celsius. Really good video, right? In terms of explaining how it's fraud and how it all works. It's a Ponzi scheme, right? This again is a thing where it makes you question Nexo. It's like, how the fuck is Nexo still operating in terms of the exact same model? It's like
They had a scare. They had their headquarters raided in, was it Belgium, a few months ago?
either Belgium or Bulgaria. I can't remember one.
Oh,
of them.
yeah.
It's
One of
somewhere
those
in
two.
Europe. Yeah.
But that story didn't really
No.
catch on, did it?
I'm honest, right? I think looking at it through my new blinkers, I'm like, if Celsius is operating like that, how is Nexo? And again, it's a domino effect. It's that news can travel. It's like information. It's full on credited information through all kinds of documentation through ex-Celsius staff, and that will as well. Even though Celsius are trying to like make it all back essentially and like continue operating, essentially. You know, is it Alec Machinsky should be in prison for what he did. It's like it's similar to fucking what's his face, Madoff and stuff
Bernie
like that.
Madoff.
It's like crazy numbers, right? Like a $30 billion scam. It's like what? Like he was put in prison, and like
But he ripped off people in traditional markets that people
Yeah,
care
it's-
about. People don't care when the officials and the governments, they don't care when people get ripped off in crypto.
they don't care about the 60-year-old who's just put a little bit of money in and now he's homeless and he's lost his retirement. They don't care about that really. So they don't care about the 18-year-old just trying to get yield on his money. But it's absolutely savage, and I think everyone's right in this sense that these are knock-on effect and it's going to get more painful. But yeah,
The other one is BlockFi as well.
yeah.
BlockFi and
Good point.
Nexo seem to be really solid, fully trustworthy. But as soon as Luna blew up, we said in the Learning Crypto Premium, both of us, we were like, right, there's no point risking 100% of your whatever it is, your savings, stables, whatever. No point risking 100% to earn 5, 6, 7% APY.
Yeah, exactly.
So I took everything off of Nexo and BlockFi as soon as the Terra Luna thing happened. And ironically, I said to you the other day, didn't I? I got a big, thick letter in the post.
Yeah.
And it was labelled with all legal stuff and like confidential, must be open. I was like, oh God, what is this? Opened it up and it was a BlockFi claim form. I was like, thank God I don't have to fill that out. Because it
Yeah, I'm
was
the same.
confusing as anything, proper thing. I thought, well, at least that's not something I have to worry about. But as I've said on previous podcasts, I'm not immune to being caught up in things like this. I was caught up in Cryptopia. I'm still waiting for my funds back from there. That was about 4 years ago. So it's not like it's not, but, and again, it goes back to my point previously, because I've already experienced that Cryptopia. That's why I was so quick to get stuff out of Terra Luna, BlockFi and Nexo. Because I was like, this has happened before. Why can't it happen again?
This is as well one of the main reasons why I went back in the market at these prices. I thought to myself, right, I'm making nothing on money that I don't really need, but it's profit. I could make units now on chain as a protocol. If it melts and we have another black swan, you know, hopefully over the course of the next 4 to 5, 6 months and we do go sideways, I can build capital elsewhere if I need to. I can take profits off other things or just save my money and put money back into the market if I need to. But the reality is, yeah, it's crap. We can't make big yield on stable currency, but I can make more yield thinking about the units. If you flip your bias to units, it's not too bad, which makes sense. But
And now's a good
yeah,
time
it's
to be
horrible.
building units.
Oh, I think, as we said before, if this market goes sideways due to uncertainty, which I think it is mainly uncertainty, scary. It's scary for us in terms of what you could build. And if you are still bullish in the market and we do get that, eventual market move into the bull market and everything's hunky-dory again, you're probably going to be laughing. But the reality is you need pain, you need the suffering, and it hurts.
And what
It
those
really
units
does.
can turn into if they return to anywhere near all-time highs as well.
Especially if you're buying solid assets. And we all try and have a decent portfolio, even if we've got a mixture of like low cap coins or meme coins, whatever. It's all about risk management. And I think the crux of this podcast, even though we're talking about black swans, is risk management should be on point. Going all in on something that's really obviously dodgy, like putting all your money into Celsius, for example, and then you trying to get your referral thing shilled constantly as a pyramid scheme, you're probably not in the right space realistically, which is scary.
I'm actually pleased in some kind of weird way that I went through what I did, because I've learned hugely by it. And I think you have to go through at least one bear, like I have now with this, to learn by all the mistakes. Like you just said, Ash, you make sure that you're more top heavy in the blue chips. Whereas, at the start of the bear, I just thought everything was going to carry on going up, and I was throwing everything and anything into the micros, thinking, yeah, this is great, it's going to carry on. But it doesn't. I've realised that now.
No, when the music stops, it really does stop. It goes into reverse pretty quickly.
I did the same in 2018. I went heavy into alts Jan 2018, which, if anyone has ever looked at a chart, worst possible time ever. But I learned a lesson,
brutal.
and that's why I was able to get out of the market earlier this time and play. But bear markets are all about capital preservation. Bull markets is about making
100%. I think people miss that narrative, and I think people forget that a lot of it's probability as well in terms of analysis. And if you can understand the two functions of a market, where it goes up and where it goes down, it's about being on the right side of the track each time. Easier said than done. Your emotions will play you, but we're going to talk in a minute about possible like black swans, which people should be kind of prepared for just in case things do happen. But the reality is, right, if you've got capital and you're using it, it's not a bad time to use it now, but you should always have some dry powder just in case it goes lower. But the reality is, right, even if we're going to a bull market at whatever point, don't be just continuously buying. Don't just be like throwing your money away. Your buy-in is in the bear markets, in the horrible, ugly periods, and then just sit, wait. It's basically hurry up and wait.
It's not about catching the tops and bottoms. It's about getting in when the odds are getting in or out when the odds are in your favour.
Yes,
that's pretty much it.
But yeah, let's talk about possible black swans. So this could be interesting, right? So I've got a list of 5 realistically. There's one positive one. There's
5
negatives, right? Yeah, but these are just randomly off the top of my head, or whatever's been put in the group. So we've got the first one is sailors' liquidation level and taxation rumours. So let me just give you some context. There's rumours going around that his liquidation levels are either $13,000 for Bitcoin or $3,000. I don't know which one it would be.
That's a big range.
Exactly, right? The reason why I say it's a big range as well is because I don't think it's 3,000.
It can't be 3,000.
He was going incredibly heavy at the tops, right? If you all remember, he was buying a lot, and then it was significantly getting less, lower it was going, weirdly.
I'm fairly sure he didn't start buying until 10 as well.
Yeah, exactly. Like it's going to be really, really low leverage.
Unless he's staking it on chain for 20% APY or something and getting loads of free units.
He's got it stuck in Celsius.
Which, correct me if I'm wrong, I'm pretty sure he can't do with BTC.
But there's also taxation rumours. These have been going around for a while, that it's a tax avoiding exercise with MicroStrategy, which is why it's been removed from the company in a certain as a non-executive role. It's a bit of a weird situation.
Step down, isn't he, or something?
These are all unproven allegations, but it could be allegations that could lead to a black swan if he does lose his position, because that is a lot of money, by the way.
We saw what happened when Elon reported that he'd sold.
Yeah, it was all bollocks. That's a black swan, though. That was a previous black swan. You think about it, like
that's what broke 30K.
Tesla was buying, and there was rumors of Apple buying as well. The apples were unfound, but the Tesla one was true. And yeah, we got very excited at that point. What we did, we broke through. That was when we broke through 12K, something like that, and we went. No, that was it.
So I'm talking about when we broke down from 30 down to 20. Wasn't
yeah,
that?
So we went. Yeah, we had both sides. We had Tesla's bought, and then we had shit. Yeah. So yeah, but I don't know what you guys think about that. I think it's a massive amount of money on leverage, which is dicing with it. It's like.
Well, he's obviously got he's obviously got a liquidation level somewhere. 12K sounds a lot more realistic than 3. But I also wonder if you flip it on its head and sort of say, well, maybe people are circulating that number, because we all know 12K has got huge confluence on the chart. When you look at higher timeframes, 12K is like the level that 13K is the level that everyone's got marked out because of where it sits on the chart. Yeah. So maybe people are just trying to enforce their narrative by spreading that rumor.
It is a rumor.
It more attractive, give it even more confluence.
It is a rumor at the end of the day, but it's possible.
Why can't he just be honest and tell us? Tell the market where his liquidation level is.
I remember last year. I remember it well. You know, his liquidation level was supposed to be like 22,000.
And he bought.
Can you still see me? Yeah. It's just all rumours, isn't it? And just each time he just keeps, he's having more comebacks than Woolworths. He's just relentless, isn't he? More than Frank Sinatra. Just, yeah.
He just keeps buying. But it's funny because he keeps dollar cost averaging up.
Yeah, pretty much. That's what he was doing all the way through.
Does anyone know when his last buy was? Has he been buying down here? Or lower?
Not that I know of.
That seems really odd, doesn't it?
Tax.
Could you imagine? Yeah. Well, what if he just goes and sells now to harvest a tax loss? Oh.
That's what I mean. This is all unbased things that I've seen on Twitter, and when you think about it, you think, that's not a bad idea. If I was a multi-billionaire with $1 billion assets, I'd fucking do that.
Well, yeah. So in the UK, it's like a 30-day rule. I don't know what the US version is.
It'll be probably not as, I don't know, probably similar. It's an interesting point, and I said it a long time ago. That could be a taxation thing, but it's unproven. I'm not making allegations, but I'm just saying if it is, stand by, because it's not going to be nice if it is. Let's talk about the other obvious one.
Yeah, let's talk about the other 4.
The other obvious one is if something genuinely breaks in the market, i.e. we have an absolute massive macro event. If there's a housing collapse like the last one in 2007, 2008, 2009, whatever it was. But the Federal Reserve do not do a bailout. They don't do quantitative easing. That to me is a potential. Don't know about you guys with that one, but obviously if they don't step in, it's going to cause pain. We know what happened in the last cycle when something did break. They did quantitative easing. It pumped the markets.
That's the thing. The Fed has always come to the rescue, isn't it?
What if they don't?
What if this time they don't? Yeah, exactly. That would be pretty huge.
And you got to think high inflation.
Well, that's the thing, because they're boxed into a corner whereby like they can't come to the rescue and make inflation worse again. I mean, inflation still hasn't really come down.
Not in real life terms, because everyone's higher wages as well.
Well, both in real terms and the data. Because, I mean, what was the peak of inflation? 9.1?
In America, in Europe it was about 10%.
Yeah, we're still in the high 8s. So it's not like we're talking 4 or 5% inflation and the Fed can go, oh, well, we can risk inflation going up a little bit more. Like, we're still really high.
Yeah, in Europe we are. America's a little bit better, but the reality is America's job market looks a lot better. But I think that's manipulated data in a way of how it looks. So, what about you? What about you, Ash? What do you reckon? Do you think if that does happen, we'll have either a simulation of what happened in 2020, or will they go, nah, you've had all your credit?
I think inflation. I think if the Fed completely lose control of it later on in the year, if you look at all the charts, we were supposed to be halting the interest rate in March, April, and now that it's unlikely, and they're looking, yeah, that's right, over the next few months, and we certainly won't get a pivot until early next year now. So
That's a point, because when you say a pivot is usually when the markets react.
Well, we need them to stop hiking before the pivot. That's the other thing.
Yeah, it could be zero for a while. We could be zero base cost, points average. Sorry, every single for like 3-4 months. It just sit there. It's like, oh great, and then it'll maybe go down a little
because
bit.
as well, like when they're talking about the Fed is still adamant about getting inflation down to 2%. That is a long way to go. They've still not capitulated and said, "Oh, we'll settle for 4." They're still hammering down to 2. So, and we've moved it. What I should have looked at what the last reading was, but I think it was high 8s. So we've only dropped like at most 0.5%.
In America, is it? No, 6.3 in America, I think, roughly.
Is it only 6.3?
Yeah, we've gone down, but we didn't move much. In the last one, we didn't move at all. We came in hot on the predictions. We went down 0.1. So I think it was something like we went down 0.1, but they were expecting 0.4 down, but it came in hot and the market didn't like it. This is why we've now got the rumblings of, it may well actually be higher rates for longer, which I do agree with. I think with the circumstances of what came down, as in natural gas has came down, certain oil prices came down, it's obviously going to affect inflation rates. And also, fucking Christmas time, it's been Christmas and stuff like that, so it's a huge factor. But the reality is, right, if they don't get it under control, which I think they are slowly, but it's taken longer than expected. I said this ages ago. Like, I remember saying it. It's like, it's going to take years. It's not going to be a quick fix. It's going to take years. And everyone's like, be down as quick as it went up. No chance. Impossible. And like, we could be here till 2025 thinking like that could be 3-4% interest still. Not interest, sorry. Well, even interest rates could be at that high still, but inflation rate.
I don't know whether that's going to create a black swan, though. That just could create depression over, and I'm not talking about a depression when you get like 4 quarters, whatever. I just think the markets could just be depressed and you get this gradual waterfall effect over the next year. Yeah, I'm
grind.
Personally, I'm not convinced that would create that black swan. I think that's something that, it will just be this, as I said, a gradual decline in the market. You'll get these rallies sideways and then back retesting the lows, coming back up, and then breaking the lows. It all depends how the crypto markets react. If they're going to follow the main indices, then obviously we're going to drop again. I personally can't see there being this breakaway from the rest of the markets, because crypto is very much risk on, isn't it?
I think it's an interesting point, because I'm just thinking back to what Jamie said on one of the live streams. He showed like the S&P 500 of like when it went into chop mode was it in the 60s and the 80s, I think. We could be doing that again. We could be going through that cycle where it be 6-7 years of absolute chop for like up, down in terms of the higher time frames, and then not moving. But we've got to remember as well, crypto is very much against the grain. It's got its own fundamentals. It works differently. As much as I like to fall down the rabbit hole of macro, sometimes I've got to put my crypto head on and think, well, actually, crypto moves differently, and it could move differently. However, we will talk about regulation in a minute. Pro-regulation will obviously bring one thing, and negative regulation will bring another. If big money comes into crypto, it will go anywhere. We'll do whatever we want to do, and we will, hopefully, fingers crossed, moon. But we'll see. We'll see how it goes.
Yeah, that data that Jamie showed us, it basically showed that in 20 years of a whole between 60s and 80s, if you held stocks for 20 years, you literally made 0 gains.
Because you basically, it was like you were round tripping, you were going up and then back down to the bottom, and then you were like, right, I'm back to where I started again. Then it went up. It did it like 3-4 times, and that's like, you don't want that as an investor.
I couldn't see crypto doing that personally.
Nah, I think we go on different fundamentals as well.
It's moved too easily as well. Still a little baby market, and that
moved by idiots, herded by everyone.
But yeah, I just checked the latest CPI is about 6.5, so it is lower than I thought, but still a way to go to get down to 2%.
I think you were thinking about UK version.
Yeah, I probably got the US and UK mixed up.
Let's talk about regulations then, because I've got 2 on my screen. Positive regulations, for obvious reasons. That could be a positive black swan, where we get rid of the dickheads, we get rid of the scammers. It's more accessible, it's easier to use, the taxation's better, all that kind of stuff, and you're not frowned upon when you ever use it. But you've also got the negative side, which could be pro central bank digital currencies, negative crypto, which is like the scariest for. I think personally that one won't affect the market as much, and I think that as a negative might be positive, because through adversity, cryptocurrency, through shit news, through against, everyone against it, we tend to do well. So I think, in my opinion, I think regulation's a positive thing. I think it will create a rumble first, though, because of that shark. Yeah, that big old fucking uncertainty cyber
Headline.
situation. But yeah, it is. It's a massive headline. It's a massive, like, oh my God, it's fear, it's uncertainty. And for me, I think it needs to happen. But I don't know what you guys think. What about you guys? Do you reckon, well, either or positive or negative, do you reckon, well, my personal opinion, it's required. I don't know about you.
Yeah. So, yeah, before I get into that, crypto seems to react to headlines rather than like the news. So, like, you see the headline, the market will react, and then you actually, 10, 20 minutes later, you see the full story. It's like, oh, it's not actually that bad, or not actually that good. Classic example was the AVAX Amazon partnership.
Yes.
Which just turned out to not be a partnership at all. They're just using AWS.
Yeah, another one as well recently was Bybit. Everyone was like, oh, Bybit's like pausing withdrawals and deposits on the US. No, it's just one of the providers is down for maintenance for a week.
They're that's exactly it. It's moved so easily by headlines. It's quite funny.
I remember the old Litecoin one. If you remember Litecoin and Walmart partnership, oh my God, that was crazy.
Yeah, that was funny. Do you know, actually quite funny. I was at work at the time. The thing broke, and I was like, oh, I want to get home and see it and stuff. I think I had like an hour or two before my shift finished. By the time I'd got home, it had already wicked and come back down. And then I saw that, it's just a big rumor. So I was like, that was
just bollocks.
Yeah, it's just bollocks. It's funny though. It's good entertainment. But so regulation, good, bad. I think we covered it a little bit on a previous podcast. It's definitely needed in terms of getting bigger money in terms of people trusting it. Open the door to things like ETFs as well, where people like quote unquote boomers or people that don't want the responsibility and risk of holding their own keys, their own cryptos and stuff, can actually get some exposure to the market without having to go through that. So like we said, like similar to what gold has, like a paper ETF, having that for BTC, allowing bigger money to come in. And also the whole CBDC thing, I think we'll probably cover that on its own podcast. But in theory, CBDCs should be really bullish for crypto, because that should really open people's eyes to, oh my God, this is like a dystopian nightmare. Like CBDCs are literally just game over. Welcome to China. Theoretically, the more they try and push that, should be more bullish for crypto, which is why
it should be bullish for us.
Yeah,
bullish for us as a company to teach people what the difference between us. I might even put it on a homepage at some point. What is a central bank fund or currency? Sorry, and then what is actual crypto like Bitcoin, Ethereum? But
because it really frustrates me, because some again, headlines, news articles use a picture of the Bitcoin in CBDC headlines, and you're like, it's classic media.
Arseholes. What about you, Ash? What do you reckon?
Yeah, I mean, if you really truly believe that Bitcoin is a store of value, I guess the two shouldn't really interfere, unless I'm wrong. The growth of the crypto. What I'm really more worried about is, and I don't know about you lads, I'm just worried about what seems to be a war between the SEC and the US crypto space, whereas they're doing this MiCA in Europe.
There's a very different approach between US
and I actually personally think that if the US start regulating it, we do need good regulation. By the way, we need insurances as well. I think for this could actually be a good
100%
growth for the crypto space, where insurance can come through. But I think if they if the SEC wrap up the blockchain companies, they will just go to Europe. They'll set up in Europe, and it will thrive. And or Asia, and I think it could even in 2 or 3
Asia.
years' time be a massive U-turn by the SEC, and they'll realise, well, hang on a minute, we're not moving forward with blockchain technology because these companies that are doing it, the Cardanos, Polkadots, they're way ahead of everyone else, and it made me laugh that this they're looking to get their own stable coin by the end of the decade. Well, we already have digital cash anyway, don't we? Less and less people are using cash, and I just think they'll if they do it too much, where they're going to have to, they'll start saying, right, that these crypto companies are going to have to pay a certain fee to be deemed as a what is it? What's the word? When my mind's gone blank. Yeah, I can't think of the word. It's just gone from my mind. Yeah, that they'll have to be allowed to operate. Yeah, I think they'll
get
just
a license, whatever
they'll just be they'll lose the whole space. That's how I see it.
We've already seen as well, crypto just adapts to the circumstances. Like when we saw China banning
security,
all the miners just moved elsewhere.
Yeah, yeah, and you'll get it eventually.
Oh right, yeah. Deeming which assets are securities or not, which is just a complete minefield, it seems. Because one thing is fine, and then when they decide they've got a problem with it, we go, actually, no, I think it's a security.
It was the same with Matic, though, when they rebranded to Polygon, they moved out of India, which was a jurisdiction nightmare, where it was like, it's banned every week.
Yeah, so let's just move country, and that country loses out on potential taxes and stuff like that.
No, they've regretted, don't they? But it's the same with you got to think Cardano. It was created in Hong Kong and stuff like that. So that they did the ICO through that. Polkadot is you got Parity, which is based in Switzerland. So they're all based in countries where they don't have SEC issues, which is fine. But it depends what the SEC will do, because they might go, right, every single asset cannot be listed in the US. But I also think as well, and I've read this somewhere, it feels like Europe missed out on Web 2.0, so they're going for Web 3.0, whereas America got 2.0. So maybe just an evolving of the guard, essentially, where America may not keep up, and they may well lose they may lose a lot of custom from it. But
the frustrating thing for Americans, though, is that the SEC and the other regulatory bodies, they're punishing the good guys and letting the bad guys get away with stuff. FTX happened, Capital, was it 3 Arrows happened?
Celsius, all these.
They all happened, yet, we're going to stop you from getting staking rewards on chain. How is that helping anyone? How is that stopping people from getting scammed? It's not. You're stopping people from getting legitimate, another source of legitimate income, whilst letting them get scammed by people like Sam.
Yeah, you're right. And it's like the main thing on the SEC website is to protect investors, but they did not protect any investor in that situation. All they do
last year.
No one. Oh, that Brazilian exchange, which had $12,000 fucking liquidity, that one.
Oh, no, the streets will never forget Bitslato.
Oh, whatever it was. Yeah, that one. I was like, what? I mean, that's the thing. Even the UK have announced that they're going to stop staking with Binance, but I don't care. That, to me, we shouldn't be doing it anyways. We shouldn't be giving our exchanges
either, can we? In UK,
no. But at the same time, though, why should we trust exchanges to stake our money when realistically we can do it on chain? But the problem is, Americans can't buy these assets because there's no exchanges for them to go on, because everywhere's wait, you can't use America. As Americans, you can't use this exchange, that exchange. So they got to go through dodgy ways.
That would all be fine if American investors and or traders were protected from things like 3AC Capital and FTX, etc. But they're not. So they're exposed to all the danger and protected from all the benefits. It's literally worst case scenario, and it must be just so irritating and frustrating to be in crypto in America.
Yeah, the UK got a massive chance if they could just loosen up the restrictions with the bank, the banks and the withdrawing and transferring, that would be a first step. And then could be the hub.
I think it's quite. Well, that's what Rishi says in all the headlines, that he wants to be a crypto hub. But then I'm not sure whether that is to try and confuse people between, as we said before, what a CBDC is and what crypto is.
That's the thing, because the article dropped recently about London being the best city. All it is because a lot of people work in London on crypto. It's like 20,000 people, which is a lot versus everywhere else. But we've only got 4 ATMs in the UK, 4 crypto ATMs. There's hardly any point of sale. So in terms of adoption, no, we're not there. But in terms of the infrastructure, yeah, we are. We've got a lot of developers here, which is good. And obviously, us as a company, we've been around for quite a while now in the crypto space, which is good to see. But the reality is, right, we're still, I think, miles off. I've never used an ATM in crypto. I've never used like point of sale because we can't in the UK. It's like you don't see it. But in other countries, if I went to like Colombia or wherever, yeah, it'd be fucking everywhere. But it's a weird one, isn't it, when you think of it that way? But I think it's good.
Ashley just highlighted as well. I think getting your money to and from banks and exchanges is like a personal. It changes between each person. Each person has a different experience. Because I've been fine.
I've been fine,
but other people have a nightmare. Other people have like all 4 of their banks are all like, no, you can't. You have to do like an interview, for a 30-minute interview every time you want to send money to and from an exchange. So I don't know whether, as a blanket, the UK is bad for that, or whether it is just down to a few individuals being unlucky. I know they come out, HSBC has banned purchasing crypto, but I think that's only with credit cards, which I sort of don't have that much of a problem with, because it's technically not your money.
Yeah, I don't give it,
Plus,
if it's about credit card.
Pretty bad habit as well.
I mean, Nationwide came out with Binance saying they're not going to be sending things to Binance, but that's probably because of the news of Binance, and it has been pretty shit news, to be fair. So for me, I've never had an issue. Like, we bank as a company with apparently the worst, NatWest.
Yeah. And our company name is Learning Crypto. It's not like we're hiding it.
Exactly. Like, it's all there. And like, even sometimes people get issues where the banks get declined, but it's very rare. It's very, very rare. It's only if they're using stuff like Starling Bank, which do have a zero policy on it. So stuff like that. But the reality is, like, I think it is a person by person base. I think it goes off like some sort of data where if you're spending a regular amount and then all of a sudden you just lump into crypto, it's like it's seen as a weird behavior. And then obviously the algorithms trigger and stuff. So it kind of makes sense, but at least the banks are, I use the word trying to protect people, which is unlike fucking the SEC, which is like a wet paper bag at the minute.
Yeah, the SEC is just going after people and stopping them from making money, but still letting them get scanned. So, yeah, good job.
Doing well, aren't they? Really well. We've got one more thing to talk about, and then we've got some questions. But the obvious one, which we haven't talked about, is Mt. Gox. Old exchange, legacy exchange, which should be dead, but it's still rumbling on. It's still burning. They're releasing, as of Friday, I think it's 164,000 or 184,000, I can't remember, Bitcoin and Bitcoin Cash.
Bitcoin Cash.
Boom, the old fork.
Do you know, have people made money on Bitcoin Cash? What is Bitcoin Cash now?
Free money back in the day. It was like a free biscuit. It's great.
Yeah, the fork. I'm going to have a little look. What's BTC Cash?
But yeah, basically, in a nutshell, from the 10th of March to the 30th of September, they're going to be drip feeding to creditors. This could mean new Bitcoins on the market, i.e. people have got some monies back. Not all of it, because it was over 800,000 hacked at the time. So there's still some gone or evaporated somewhere. But the reality is some people will pick up some money. I don't know how much they're going to get between the split of them, but the reality is they're probably going to be pretty wealthy in dollar value versus obviously the BTC units, because these guys probably would have been buying at like $100 BTC or lower. How much is it?
So Bitcoin Cash right now is about $123.
That used to be like $5-6 grand.
Yeah,
back in the day.
But yeah, times. The people that were buying Bitcoin for Mt. Gox, I mean, you're talking in the hundreds of dollars, aren't you?
Oh, less than that in certain cases, from 2012 to like 2014. 2000. That time period is ridiculous.
And it used to be,
it was selling. You were sending money via postman. It was ridiculous. Good times. But yeah, that's the other obvious one. I personally don't think it's going to affect the market that much. I think a lot of these people may well hodl now.
It's a very interesting situation, isn't it? because you've been forced to hodl. You were buying it for literally, if we say, let's just say a couple of $100 a piece, and it's now 22K. You're going to be taking some profit, I think.
Oh yeah, but I think some profit will be taken, but I also think some people will be like, hold on a minute, we're down 60%.
Yeah. I mean, it all just comes down to the individual and their circumstances, doesn't it?
If that was me, say if I had like 1,000 BTC on there at one point, right, which is a lot, but if people had that, they're going to get a percentage of that back, aren't they? They might get 50 back or whatever. In terms of value, that's a lot of money, right?
Yeah,
Even though they've lost a lot.
Everyone's coming out of that in profit.
In dollar value, yes.
Yeah.
Like they might go, you know what, I might just stick with this for a bit and just sit, maybe pay myself a little bit, take 10% out or whatever, and just like, right, I've had a fucking shit time. But they might still be in the market. They might have recovered. You just don't know. It might be sold at OTC as well.
Yeah, I suppose what you got to think as well is all of that Bitcoin has been off the market for all this time. So you're adding a lot of supply. And if everyone does do that and say, oh, I'll take 10%, that 10% of all that bit. So what did you say? How many Bitcoins?
I think it's 184,000, I think, is the amount. And then the same equivalent for Bitcoin Cash.
Yeah. So if you say like everyone goes, oh, I'll sell 10, 20%.
They might sell the Bitcoin Cash because they're going to get double, aren't they? They're going to get that and Bitcoin Cash. They might just sell Bitcoin Cash. That goes to zero and fucks off. Happy days.
Finally, yeah. So yeah, it's a real interesting one. But as I say, if everyone decides to take a little bit of profit, it all depends on how much that accumulated, that accumulation of numbers equals. Because it's fresh supply at the end of the day. It's BTC that's been off the books.
There were two massive hacks as well back in the day on Mt. Gox, which was supposed to be from a foreign. I won't go into who it is, but there were at war at the moment abroad, and obviously, with the blockchain, if they suddenly dump a load of this on the market, surely they're going to be tracked, or would they not care?
It's already tracked. I can see it on the is it Coin Unlocks or Unlocks, the website that I use
and
for
even then,
token unlocks. They've got like a Mt. Gox
in the last however many years, 8 years, 10 years since the hacks. I would have thought a lot of it would have been out there anyway. Yeah. So I'm on your side here. I think that I think it's probably going to be a bit of a non-event actually.
I think that what makes it more of a non-event is they're going to get the like for Bitcoin Cash, which obviously increases what they've got, so they can maybe go, you know what, I'm just going to hold the Bitcoin. I've been holding it for fucking donkeys anyways. We'll see what happens, and if it does mean that they will take profits more aggressively, if we get to 60,000 again at whatever point, great, liquidate some newbies, it'll be fun.
The market will decide at the end of the day. That's what people sometimes forget. The market is purely just millions and millions of people buying and selling, making small individual decisions at every minute of every day.
Yeah,
it's not like some organic thing that's controlled and manipulated, but depending on what your theories are. But the reality is that it's just a bunch of people. The chart is just a visual representation of people making individual decisions every minute of the day, whether to buy or sell. So yeah, the market will decide at the end of the day.
We do have some questions from the community. These are kind of simple ones, really. So, first one's from Maurice. Is basically saying Bitcoin has never been in a recessionary environment as we're now seeing. Will the halving be a catalyst to spur the bull market? What about you guys? What do you reckon?
Always has been. So, I wouldn't bet against
Gaz. I think the only thing that can kind of stop it is, like we were talking about before, with inflationary problems and the whole economical landscape. That's the only thing that may not push it as high if the general market is coming down. But yeah, I mean, I wasn't around for the last one, so I can't say. But
the halving narrative could be that. So we've always been waiting. I don't know about everyone else, but for me, the whole Bitcoin thing and why I love it so much is that sort of romantic vision of it decoupling from everything else and breaking away. And at the moment, we're obviously still heavily tied to traditional markets. Like, I mean, even when I do my trading analysis, I'm always looking at the S&P because Bitcoin just traditionally follows the S&P. But the halving narrative, this one coming up, and as we say, if we are struggling with inflation and stuff like that going towards the end of the year, the halving could be that narrative that actually allows Bitcoin to break away, and that could be its moment.
Yeah.
We don't know.
Scarcity is a big thing as well.
Yeah. So yeah, we'll see.
I think
for that moment. We're just waiting for that breakaway moment, and this might be it.
I think it will be a catalyst, but it's not just that on its own. It's like the hype is the narrative start, but it's the people in the herd that gets it. So when Bitcoin will break convincingly above 25, 30K, people will be like, oh, why is that? And then everyone's like, halving, scarcity, numbers go up. Okay, I'm going to buy it.
Now regardless, I want to learn about Bitcoin.
Yeah, regardless of how much money your phone contract is or how many fucking mouths you feed, you want to make money, and it happens every time, weirdly. And even when you think, oh, we're never going to go up again, and then all of a sudden Bitcoin starts going, it's like, oh, hello.
Headlines again, yeah.
Yeah, it happens. One final question from Ellis is there any way to predict a black swan and, how to prepare for a potential event? All I'm going to say is you can't. It's risk management, in my opinion. You've got to have dry powder just in case it goes wrong, and you've got to have profit levels just in case it doesn't go wrong and you can make money. So, yeah, that's my thoughts on that. I don't know about you guys. What do you reckon?
Well, our advice is always never be fully in or out of the market, isn't it? You always want to have some in, some out, and then you just change your percentages depending on bull market, bear market, etc. So yeah, always have some dry powder no matter what, because as we say, black swans are called black swans for a reason. They can't be foreseen, and that was one of my biggest mistakes. So the COVID drop didn't really affect me too much in terms of losses, but more in a hindsight perspective of I wish I'd had stuff just ready and organized for a big drop. So I mean, again, I was at work when it happened and the telegram was going off. So that day, the COVID drop day, phone was going off, went onto the exchange app on my phone, and it was just like flashing red and the numbers were dropping, it was cascading. I was like, oh my God, this is crazy. And it was fascinating to watch. But then I was like, oh, but I've got nothing set aside, nothing ready, certainly nothing on the exchange to be able to commit to buying. And then the following day, like we'd already bounced up quite a bit. So you're like, oh, okay, well, maybe we'll revisit those lows, maybe we'll go lower. And then I sort of really missed quite a big opportunity with that black swan because it rallied quite hard, quite quickly. I just wasn't organised and ready to catch it. So yeah, that, again, something to learn from and to be ready for the next one if you're lucky enough to witness it.
Keep your crypto off the exchanges. That would be my advice to anyone. Everything else that Gaz said, echoing, just have that ready to buy low. And this is why, may I say that, learning crypto is so brilliant, because we might have, different routes that we're going, but we're all on the same kind of road. And, buy low, sell high. And but yeah, just for me, it would be keeping it off the exchanges in case. I mean, I've got a little bit of on Swissborg, and even that I'm terrified. And a couple of weeks ago, I was going to keep like 25% of an asset on Binance, and Ellis said to me, "Why? That's what you've got a ledger for." And I think, well, it means I've got to pay if it's going towards, if a price is going towards my limit order, well, I want it on there. Well, pay the gas fee, send it over as it's approaching, because you just don't know what is going to be the next black swan. It could be one of the biggies that will go down, and that will really cause a black swan, like one of the big exchanges being caught up in all this. So, yeah.
Yeah, you don't know until it's too late.
Thank you for joining us today in this podcast. We hope you enjoyed it. Hopefully it wasn't too bearish for you. If you're new around here, feel free to like this podcast and check out our website, learningcrypto.co.uk, if you want some cryptocurrency education.